Is Bitcoin being quietly weaponized or unleashed? While you're distracted by price swings and market noise, powerful institutions and governments are rewriting the rules, and Bitcoin is at the center of a global power shift. Some nations are embracing it. Others are trying to contain it. But one thing is certain: regulation is no longer a maybe. It's the battlefield. In this video, we uncover how favorable policies, global crackdowns, digital currencies, and the future of the US dollar are all colliding. Will Bitcoin rise as a global standard, or will governments pull the plug before it ever gets there? Stick around. What you're about to hear may change how you view the entire future of money. And hey, if you're watching this and you care about financial freedom, hit that like button and subscribe, because these next few years are going to be wild, and we're diving in head first. What happens when the very institutions that once feared Bitcoin now start shaping its future? You see, regulation has long been the sword hanging over crypto's head. But lately, something strange is happening. The same governments and financial giants that warned against digital assets are quietly rewriting the rules, and not to destroy Bitcoin, but perhaps to absorb it. It all begins with strategic policy shifts. In the US, the narrative has pivoted. Just a few years ago, Bitcoin was framed as a tool for shadow economies. Today, it's on the balance sheets of billion-dollar firms. Spot Bitcoin ETFs are approved. Politicians are debating Bitcoin mining rights like it's national infrastructure. And behind the scenes, regulatory bodies, from the SEC to the CFTC, are scrambling not to ban Bitcoin, but to define it, control it, and ultimately integrate it. But what does this mean for price? If the rules become clear, if institutions feel safe, then the floodgates open. Pension funds, sovereign wealth, insurance giants, all bound by compliance, could finally step in. We're not talking millions, we're talking trillions in potential allocation. Bitcoin doesn't just go up, it rewrites the scale of what's possible. The volatility shrinks, the cycles mature, and retail investors get dragged upward in a wave they barely understand. Still, here's the catch. Regulation isn't always favorable. Some nations see Bitcoin not as an asset, but as a threat, a decentralized force that undermines their control over capital, taxation, and monetary sovereignty. Countries like China have doubled down on crackdowns. India sends mixed signals, embracing blockchain, but taxing crypto into submission. The European Union has introduced sweeping rules with MiCA, attempting to bring order, but also to bring digital assets under the state's thumb. So what happens when half the world welcomes Bitcoin and the other half suppresses it? We enter a phase of geopolitical fragmentation, where Bitcoin's value becomes a mirror of global trust in regions of financial instability, like parts of Latin America, Africa, and Southeast Asia. Bitcoin adoption is surging, not because of speculation, but survival. Citizens bypass broken currencies, hyperinflation, and restrictive banking. For them, Bitcoin isn't an investment, it's a lifeline. This is the moment central banks fear most. Because if enough people choose Bitcoin over their national currency, even subtly, it begins to erode confidence in the entire monetary system. And the biggest question starts echoing louder. What happens to the US dollar? Let's not be naive. The dollar isn't just a currency, it's a weapon, a global standard, a tool of diplomacy and domination. But Bitcoin, with its fixed supply, borderless movement, and rising global trust, poses a philosophical threat, not because it replaces the dollar outright, but because it introduces choice. And once people have choice, systems change. Do central banks let that happen? Some will resist, others will adapt. We're already seeing central bank digital currencies, CBDCs, being developed at lightning speed. These are the state's answer to crypto, programmable money with all the benefits of blockchain, but none of the freedom. Make no mistake, CBDCs aren't here to empower individuals. They're here to compete with Bitcoin. And yet, the paradox is this: the more governments digitize their economies, the more they validate Bitcoin's design. They bring awareness, infrastructure, and legitimacy, even while trying to maintain control. So where does this all lead? But there's another silent force accelerating this shift, and it's one we can't ignore: artificial intelligence. As governments scramble to understand and regulate Bitcoin, AI is already transforming how it's traded, tracked, and even controlled. On the one hand, AI-driven trading bots and algorithmic hedge funds now dominate volume across major exchanges. These systems react faster than any human, analyze more data than any team, and execute with surgical precision. They thrive on volatility, and in doing so, they subtly shape it. But the real twist lies in surveillance. Governments and regulatory bodies are now using advanced AI models to trace blockchain transactions, unmask privacy protocols, and enforce compliance in ways that were impossible just a few years ago. That means pseudonymity in crypto is slowly dying, and with it, a core ethos of the early Bitcoin movement. Now imagine a future where AI determines risk scores for wallets, flags unusual peer-to-peer activity, and even helps central banks preempt capital flight via real-time blockchain scanning. This isn't speculation, it's already being prototyped. Combine that with programmable CBDCs and behavioral-based tax enforcement, and we begin to see the architecture of a financial surveillance state. A future where Bitcoin still exists, but only within boundaries drawn by AI-assisted governments. It's a strange paradox. Technology designed to liberate wealth, now shadowed by the very intelligence we built to control it. And yet, this tension may be exactly what pushes innovation forward. Because every time freedom feels caged, a new layer of decentralization emerges to break the lock. So where does this all lead? Bitcoin stands at the crossroads of regulation and revolution. Favorable policies could unlock exponential growth. A new era where Bitcoin becomes a global reserve alternative, not just a tech investment, but hostile policies, overreach, and authoritarian backlash could spark resistance, forcing Bitcoin back into the shadows or pushing innovation offshore. The final outcome isn't decided in one country or by one law. It's decided by a mosaic of global sentiment, by the tug-of-war between freedom and control, transparency and surveillance, old money and new systems. And that's what makes this moment historic. Because Bitcoin isn't just reacting to regulation anymore, it's starting to shape it. If this video helped you see the bigger picture or raise questions you've never asked before, then you're already ahead of 99% of investors. Bitcoin's story isn't just about charts and price targets. It's about control, power, and the global rewiring of wealth itself. Drop a comment below. How do you think this all plays out? Will favorable regulation take Bitcoin to the moon? Or will governments build walls it can't climb? Smash that like button to support independent financial content. And if you haven't yet, hit subscribe so you don't miss what's coming next. Because this isn't just the future of crypto, it's the future of money, and it's already happening. If you're interested in Bitcoin growth, government and institutional adoption, and more, check out the video on screen where I deep dive 8 reasons BTC will keep rising. Or, if you're new to the day trading world, check out the video where I walk you through day trading for beginners. Complete stock market tutorial and strategies 2025. Thank you for being part of this journey, and I'll see you in the next one. Let's build wealth the right way, together.